In the meantime, we'll do Josh Brown's best stocks in the market. We know he loves NVIDIA, but what else is on the list that you want to spotlight today?
I want to talk energy, which we almost never talk about on the show because this sector has obviously shrunk in importance relative to some of the companies that we spend the A block on. But I do still think there are opportunities here. We got a really good report, for example, from both Baker Hughes and Valero, which are two of the energy names that we've talked about as best stocks to market. I have two more with earnings reports coming up. One is Phillips 66, which I own personally. We talked about it on the air. I bought it a couple of days later. They're going to report tomorrow. And I think this is the type of situation where, you know, we watched Marathon, we watched Valero. These stocks have broken out. They've retested. They've maintained their breakout, and they look great. Phillips has really been the laggard, and I think this could be the quarter where they get their act together. So we're looking on $30 billion in revenue and $2.29 a share. The most important thing here with these names is returning capital to shareholders. So that's what I'll be watching for as a long. The other one, very quickly, that I think is worth getting into here would be Marathon. I think you stay the course. People are asking me, what do you do here? If we could just pull it back and get a little bit of a longer-term chart. What do you do here? I just think the refineries that we have that are publicly traded, there's only a couple of them, they look really good. And so if people are asking me, all right, this thing broke out, now what? Do I stay with it? My answer would be yes. I think the stock wants 200.
Joe?
I can confirm on Baker Hughes. I own that. I bought the refiners over the summer, all three of the names that Josh has mentioned. I exited on Marathon just because my exposure to the refiners was a little bit more than I was comfortable with, too much leverage. Tomorrow in Phillips 66, I'm not correcting Josh, but I think what we want to hear from them is that, more importantly, they're paying down debt. Their debt level is too high. You got to get that debt into the mid-teens versus above $20 billion. And that ultimately might mean that they actually do pay less to shareholders in the form of a dividend.
We don't own any oils.
Another philosophical thing?
No, it's not philosophy. It's
refining margins
what are
are
you,
strong.
just Mag 7 or bust?
No, but it's timing. It's timing. We've been out of oil for a while. No reason for us to get back in.
$60 oil is a great environment for refiners, sorry.
Well, it is. And I think it's not so much about the price, it's about the volume and driving volume production in the United States. I think that's the objective. For us, it's also focused on natural gas, and the independent power producers, they use natural gas. So that's where we are in the energy ecosystem.